Welcome to Accounting Brew, where boring numbers become your daily cup of clarity. Today's topic: what is an asset? Let's get started. Here's the textbook definition. Who writes this stuff? Let me put it simply. Assets are valuable things you own that help you make money. You've opened a coffee shop. Inside, you've got a coffee machine, a grinder, and loads of coffee beans, milk, and syrup, all things you paid for. These are your assets. Cash in your register, unpaid bills from customers, and money the delivery apps still owe you, all assets too. Even the lights, tables, and decorations you installed in your rented shop count as assets. Basically, if you own it and it helps you run your business, it's an asset. As for your lovely accountant behind the counter, nope, she's not an asset. She's labor. You've got to pay her at the end of the month. Many people who open a coffee shop only think about machines, tables, chairs, and cash. But they overlook invisible, yet quantifiable, intangible assets. For example, your shop's trademark, unique menu design, and secret coffee recipes. These are intangible assets recognized in accounting that bring you real economic benefits. As for the good relationships you build with regular customers, though they can't be recorded on the books, they're your secret weapon for business success, helping you keep loyal customers and spread positive word of mouth. Don't underestimate these invisible forces. They're just as crucial for your business. An asset is like your personal list of wealth that helps your money grow every day.